that's a problem of capitalism that you've raised. It's a much broader issue. I think, look, there are issues obviously that are being debated around the world on issues to do with short-termism as a challenge that, in a way, capitalism faces, listed companies face, and a realignment around how you define stakeholder priorities and so on. And indeed, there are investors who are beginning to ask themselves whether they should indeed be entirely short-term, and whether or not that actually leads to a loss of value in the investments they're making. And indeed, from a country's point of view, whether simply having short-term focus in terms of investment decisions actually slows down GDP growth and development as well. So those are very important debates. My own sense is it's not so much a function of whether you're listed or not. It's a function of the role which investors play, listed or unlisted. Actually, the same kind of issues arise. It's not that when you're unlisted, there is not pressure or focus to perform, or short-term pressures, or market pressures, or market share pressures, or pricing battles to be fought. So I don't think it actually changes that. In fact, I would argue that the transparency and disclosure and so on, which is implied in a listing, actually probably improves your quality of fiduciary responsibility, trust. One of the things that holds back mutual funds is precisely the ease of doing business, if you like, with fund houses is not at all comparable to the ease with which you can actually undertake a fixed deposit, and particularly post Jan Dhan Yojana. And you can see the kind of differences you've highlighted. So I can, with an Aadhaar card, I can open a fixed deposit account. For a mutual fund, I need a PAN card. Now, why do I need a PAN card? If the Aadhaar card is good enough for a fixed deposit, why is it not good enough for a mutual fund? I think this is a very active area of discussion for us. We are talking to the regulator. It's also something that involves the Department of Revenue, who have their own concerns on this. But I think we are going to pursue this quite vigorously, because it is a very important reason why adoption of funds is slower than we would like. So we must get these operational difficulties out. On the broader point on online, of course, it's a very big opportunity for us. It's also a very big opportunity for our distributors and advisors. It's an opportunity for both of us, because it's enabling. It's neither a threat. It depends how you use it. If you're a good advisor, it's clearly an opportunity for you as well. And so in our online strategy, we are trying to work out that balance, if you like, between enabling advisors and actually enabling investors, and doing both of those appropriately. But it is going to be a transformational change in terms of how people access funds. And of course, around the world, there's talk of robo-advisory and all these other concepts as well, which we've not yet seen in India, but it's not very far away. I would question the premise that to begin with. But first, yes, I think on the equity funds, I think what we focus on is consistency. And we're very happy that typically we are ranked right at the top in terms of consistency. So I think our investment process, to that extent, does place a reasonable emphasis on consistency. It's stock picking, it's research oriented, and our incentive system in a way does reward consistency internally as well. On the fixed income side, actually our fixed income funds are very highly regarded, and our reputation as a debt house has grown substantially, apart from, of course, formally getting awards, if you like, for being the best debt house, from a couple of industry bodies and so on. What we have been somewhat conservative on relative to one or two of the fund houses is we've not built an aggressive credit portfolio. There are some fund houses who've built a very aggressive, high yield, if you can call it that, book. And that has been sold quite heavily to high net worth investors. Now, these are early days in the industry. We don't yet know what the impact of that is actually going to be. So far, we've had relatively few defaults.